Thank you. Good morning, not good morning, good afternoon, members, and welcome to this meeting of the Stranraer Common Good Fund Subcommittee of the 29th of August 2024. I would let you know at this point that this meeting will be live streamed on Teams and that a recording will be available online shortly after the finish of the meeting. Members may notice that when calling members to speak, I will refer to them formally and using their title, i.e. Councillor Smith, so that it is clear who the councillors are and who the officers are. Remote participants, that's all of us today, please follow the good practice guidelines, which includes muting microphones and switching off the video when you're not addressing the meeting. Writing speak in the Teams chat function when you want to contribute. If you're in the hall, you can do this on, well, nobody's in the hall, ignore that bit. Please don't repeat contributions already made by other members. No material should be posted in the chat function if it's intended as part of the discussion. Usual standing orders apply, including that any votes will be undertaken by roll call. If any member has to leave the meeting, please either leave the Teams meeting for that period or leave in the Teams chat function and then join when you rejoin the meeting so we can keep track of whether we are quiet. All members should speak clearly, taking their time and speaking directly into the microphone when making contributions. When referring to reports, please provide reference to the relevant page and paragraph to allow everyone to follow. Please focus contributions in the area where clarification is required or to propose an alternative to a recommendation. Item 1 is the sederant, and apologies. I believe we've got myself, the Chair, Councillor Dashper present, Councillor Giusti and Councillor Hill. We've got an apology from Councillor Scobie. Is that correct, Clerk?
Yes, it is.
Thank you. So we're quiet then. Brilliant. I confirm my agreement to members' remote participation. Item 2, declarations of interest. Do any members have any statements of connection or declarations of interest to make? Nope. Good to go. Item 3 is the minutes of the previous meeting of 19th of June 2024 of the Common Good. Are members happy to note the minutes? Yep. Thank you. Councillor Hill, you've got your hand up.
Yeah, can I just ask that the 4.4, it was further agreed to award the Millennium Centre the loan, the grant on a loan basis, just to see if they've accepted that, to have it recorded, please.
Can officers advise on that point?
Yep, certainly. I'm just going back to the previous minutes. The Millennium Centre were offered part grant and part loan. Is that correct, members? Yep.
£10,000 loan.
So the grant money has been uptaken and officers are currently working with both finance and legal services to get the loan drawn up, and I'll update officers as soon as I know how things are progressing.
Thanks, Julian. Councillor Hill, is that satisfactory?
Yeah, it was just to make sure that, you know, to find out whether they'd taken the loan and so that we had it recorded as well, whether they'd accepted that and how we were progressing with that. Thank you.
Good stuff. Thank you very much. Okay, item 4 is the Stranraer Common Good Investment Approach report by the Head of Thriving Communities. This is our only item on the agenda today. We've got David Hurston from Brew and Dolphin here to provide us with a presentation setting out the decisions that are required to be made by members to agree an investment approach for the Stranraer Common Good Fund subcommittee. David, can you take us through your presentation, please?
Yes, thank you very much indeed. Apologies, I think some of you might have already heard me going through a similar presentation. So it will be quite similar to one you've heard before, but nevertheless we have to treat each client individually. Just to introduce myself, I'm David Hurston. I work in the charity team at Brew and Dolphin, so I manage accounts for lots of different clients similar to yourself up and down Scotland. I've been with the company for my sins for 24.5 years and have been working specifically with not-for-profit organisations for the last 14.5. So that's my responsibility for your investment sits with myself. I've prepared a meeting pack, so I'll just share my screen and take you through that. So just starting off, what I'm showing here is how stock markets, the various stock markets of the world have done over 1 year on the left-hand side and then over 10 years on the right-hand side. So the last 1 year has been characterized by general positivity. And the key catalyst for that was better than expected inflation numbers back in October and November in 2023. At the time, we were worried about more interest rate rises to combat inflation, but we were able to park those worries and markets moved on to looking for when interest rate cuts were going to come through, which is quite a big shift in mentality. We've also had better than expected economic numbers over the course of the year to date, generally speaking. And the corporate sector has been delivering results which have been generally meeting or beating expectations. So it has been quite a positive time. We did have a bit of a wobble at the start of August for some technical reasons in markets, but we have actually now recovered all the ground that was lost. If you look here on the left, the best performing market, the green line at the top, that's the S&P 500, which is the main index in America. The other equity markets you've got there, the mustard line is Asia, the blue line is the UK market, and the black line is Europe, which have been much of a muchness. And then the red line at the bottom is the government bond market, so lending money to the UK government. The US market has done particularly well, largely on account of its large weighting in technology, which has been doing particularly well. Artificial intelligence has become a major theme and has been driving a lot of these technology share prices higher. Over the last 10 years, again, just worth mentioning how much better US equities have been than anything else. So they have been miles ahead of the next best performing market. And again, that is down to these large technology companies, which have been generating substantial earnings growth. And to give that some context, the US market, roughly 30% of the US market is technology companies. Here in the UK, it's around 1%. So quite a substantial difference in the makeup of the two markets. Just looking at the Stranraer Common Good, specifically how things are set up at the moment. On our scale of 1 to 10, with 1 being the lowest and 10 being the highest, we manage the investments with reference to risk category 6, with a long-term investment horizon of over 10 years. The objectives, you want to maintain the real value of the assets, so protecting against inflation whilst funding your expenditure. And you also want a growing income stream over the long term. We don't have a formal income target in place, but we understand income is important to you, and that income is paid out on a monthly basis. Currently, there are issues, I believe, with updating some bank accounts in the background, so we haven't paid out the income for the last 2-3 months, but I understand that efforts to get things updated are ongoing. The portfolio is invested through collectives only, so there's no direct equity investment. The investments of the fund are pooled alongside other investors and invested to gain a general market exposure. We've got no formal restrictions placed upon the investment, and we have no formal investment policy statement in place at the current time. So just to give that risk a bit more flavour, we offer investment management services to charities between risk category 3 and risk category 8. And you can see there where risk category 6 sits. So broadly in the middle, which in terms of the underlying asset allocation means that you have very roughly 2/3 invested in share markets, stock markets, which can be volatile, and 1/3 in diversifying assets, so things like fixed interest and bonds and alternatives. So by way of an update, the value of the investments as at the 22nd of August, standing at £709,460. We've included there the valuation going back over the last few years, and the current valuation is probably about as high as I think as it's ever been. So it's been nice to see the portfolio participating in the strength that we've seen in markets. In terms of performance numbers here in the central table, we quote what's called a total return performance here. So that's a combination of the income which is generated and also the capital growth which is generated. So you'll see since the end of March, the investments are up by just under 3%. Over the previous year, a total return of 10.6%. And we've included there the longer term numbers, 10-year figure on the right-hand side of the page there. So a total return over that 10-year period of just over 75%. The income is listed at the bottom there. So the income last year was just under £19,000. Looking forward 12 months, that's projected to be around £18,300, which in yield terms is 2.6. So an income yield of 2.6%. Risk category 6 gives 2.2, so we have a bit of an income bias. If we lend our money to the government today for 10 years, they give us 4% a year, give us our money back. Inflation at 2.2%, and then the Bank of England base rate sitting at 5%. So each of our risk categories comes with an associated asset allocation, and that's listed down the right-hand side of the page. The portfolio will always look a little bit different to that, so we do have some flexibility to be tactical relative to that benchmark. We are in line in fixed interest, so you can see there 17% of the portfolio invested in bonds in the UK and overseas. It's very slightly underweight in UK equities, so 18.6% invested in the UK, but we do have quite a pronounced bias towards overseas equities, so just over half the portfolio invested internationally, and the largest allocation within that has been to North America. So you'll see there 30.9% invested in North American equities. And if you scan your eye down the page, you'll come to something called global investments. So those are funds which invest on a global basis and don't fit neatly into any of the geographic buckets that we've got there. The majority of those global investments would also be in North America. So we do have an overweight position in North America, and it is the largest individual exposure that we've got, and has certainly helped performance over the course of the last year and longer. We've got diversification into alternatives, which is some absolute return funds, some gold and some infrastructure, some commercial property, and a little bit of cash at the moment. Top 5, bottom 5 performers. This is over the year to the end of March 2024. Your two best performing holdings are both managed by Baillie Gifford in Edinburgh. So we've got Baillie Gifford American there, and Scottish Mortgage Investment Trust. The philosophy underlying both of these funds is quite similar in that they seek to identify companies, the winners of tomorrow, the disruptors of the future. They have been very successful at being very early owners of the likes of Amazon and Tesla in the past. The shares can be quite volatile, but over this period, they have done very nicely. And then we've got other holdings there that offer exposure to America, which have also done well. So we've got the S&P 500 tracker, the Lion Trust Fund, and then the Fidelity Fund, reflecting that strength in US equities. On the right-hand side, infrastructure investments have had a more difficult time of things. There is a link to higher interest rates with these sorts of holdings. Looking forward, with interest rates likely to come down more over the course of this year and next, we think that these investments should do better going forward. They do also pay us very nice levels of income, so we are getting paid to wait for a recovery coming through. So we've got there the renewables infrastructure, Hickle infrastructure, and the Franklin Templeton Clearbridge infrastructure. And then the other two holdings there are very slightly negative over the course of the 12 months. And then just since the end of March, relatively short time scale we're looking at here. But you can see some of the investments which have done a bit better. The UK has done a bit better since the end of March. So the two best performing investments in the short term are both UK. And then you can see down the right-hand side there what's not been going so well. Scottish Mortgage has given back a little bit of the ground that it made last year, but nothing which gives us significant cause for concern. So when we're managing the investments, we do take environmental, social and governance factors into consideration. So that's seeking to invest in good investments that are good companies in the underlying funds, as well as being good investments as well. And we are now able to measure that using a tool that we have. And you can see here that the portfolio has an ESG risk score of 20.84, which on its own probably doesn't mean that much to you, but we've included there the FTSE All World as a comparator. So that is all of the companies in the world put in together. And when it comes to ESG risk scores, the lower the better. So the portfolio does compare favourably on that basis. We are able to give that a bit more detail. So if you look in the centre right of the page, you can see that the vast majority of the assets that we have sit in the medium and low ESG risk buckets, with a small amount of exposure to negligible and high ESG risk. You will note that not all of the portfolio is covered, so there's a not covered section there. So not everything gets an ESG risk score. So cash doesn't get an ESG risk score, gold doesn't get an ESG risk score, and government bonds don't get an ESG risk score. So that's why that's not 100%. We are able to give that a bit more detail still, so you can see the individual holdings which contribute least and most to the ESG risk. So your negligible ESG risk holding is called Tritax Big Box, which is a property investment. They own distribution centres or big boxes, which is why I got a funny name, and that screens very well on an ESG basis. On the right-hand side, you can see, perhaps not surprisingly, the World Energy Tracker, which does have some exposure to fossil fuels, which is your sole exposure to higher ESG risk. We're also able to measure the carbon intensity of the investments. So you see in the lower left of the page here, what we're measuring is the tons of carbon dioxide emitted per $1 million of revenue. So the portfolio emits 131.42, which again compares favourably with the All World Index 207.43. So this is a relatively new tool for us, but hopefully it's something which is of interest. Obviously, as an organisation, you have lots of stakeholders, and hopefully gives you some comfort that we are taking these sorts of things into consideration when managing your portfolio. So just in terms of markets, I've just put in here a few slides at the end for your interest. Inflation has been a major theme over the course of the last few years, but now in the UK down to 2.2% is much more under control. We may see inflation bump up a little bit as we go throughout the remainder of the year. The renegotiation of the energy price cap will have an impact, so we might see CPI drifting up towards 3% later in the year, but I think the risks of that getting back up to the sorts of levels that we saw in 2022 are quite limited now. And that has meant that central bankers feel more comfortable in bringing interest rates down. They are the major tool that they use to control or to try to control inflation. We have seen the Bank of England move. We have seen the European Central Bank bring rates down, and the Federal Reserve will follow suit when it meets next month. And rates will continue to come down, but they won't get back down to that 0.5% level that they were at since the financial crisis, probably finding a new base at a much higher level, around 3.5%, which is much more in keeping with long-term averages. But nevertheless, interest rates coming down generally quite supportive for investment markets. I mentioned we've been getting some better than expected economic news around the world. The most important number on this page here is probably the orange bar for the US, so projected growth of 2.3% this year in their economy. There was a lot of expectation or speculation last year that we might see a recession in the US in 2024. That now looks extremely unlikely, and 2.3% growth projected. Even here in the UK, we are expected to grow our economy this year and next, and we've got global growth there at 3%, which is again broadly in line with long-term averages. So interest rates coming down at a time when the major economies are growing is quite a supportive environment, generally speaking. Politics has been a big factor over the course of the last few years. We've had our own election here. and there hasn't been a huge impact to markets as a result of that. But perhaps more importantly, in America, of course, we have got the situation ongoing at the moment. These polls here suggest that Kamala Harris is a slight favourite to win at this stage. Very much remains to be seen if that's going to be the case. November's a long way off. Regardless who wins, to some extent, we don't think this will have a major impact on the US economy or in financial markets. But we'll wait and see. From a purely business and market point of view, Donald Trump is perhaps a slightly better outcome. He's generally deemed to be more pro-business and took a lot of regulation out of the financial system in America when he was in charge previously. But this, as I said, November's still a long way off, so we will wait and see what happens there. So just in summary, we have seen recession risks picking up a little bit in the short term, but we still think that the economies of the world are likely to keep growing this year and next. We did see some softness in the US jobs market recently, but I think some of the worries we saw around that were overdone. Central banks have moved into a new phase now of bringing interest rates down. Clearly risks remain. US jobs market's incredibly important. What happens if that falters? Geopolitics is always a worry. What happens if inflation reaccelerates again in a way that we don't expect? What happens if we see some disappointment coming through from some of the big companies, particularly in America? In terms of investment views, we're comfortable being overweight in equities, and our US remains our favoured market. And that's well reflected in the portfolio at the moment. Underweight in corporate bonds in favour of government bonds, and underweight in absolute returns. So I think taking everything into consideration, we've had a pretty good run, certainly over the last sort of 9 or 10 months. But interest rates coming down at a time when economies are growing and the corporate sector is generally doing pretty well means we're still reasonably constructive on the prospects going forward. So I'll stop sharing my screen there. That's all I had to run through formally with the presentation, but very happy to answer any questions. The main thing I would like to get from today is just to confirm that you're happy with the way that we're doing things. We are obliged from a regulatory point of view to regularly reconfirm with you that what we're doing is appropriate. So if there are no changes, I can prepare what's called a client advice review on the back of this conversation, which would confirm that.
Okay, thank you, David. Thank you very much for your presentation. I know you're doing the rounds today. Do any members have any questions for David about the investment portfolio and such? Councillor Giusti.
Chair, I'm glad to hear that the folk in Stranraer need Trump to win for us to get a good benefit out of it. But I've got a few questions regarding the actual the details that we've got here. So, Chair, my question is see the 2.63% return that we are seeing on our investment, is that considered a good return, or is that average? How are we compared to other funds with £691,000 in the piggy bank? My next question is, at the minute, while interest is high, would we be better actually having that in a bank, where there's even perhaps less in the management fees, for example? I know that they're, in the grand scale of things, they're not really affecting us that much, the management fees, but would we get a better return from the bank? That's my questions for the moment, Chair, but I'll have more ideas later on.
I'm sure you will, Councillor Giusti. I won't comment on the Trump versus Harris thing for Stranraer, but David, are you able to field either of those two questions?
Yeah, both very good questions. In terms, what I might just do is bring up the relevant page again.
Is this the page, David, where it says that we are at 20% and elsewhere is 22%?
So what we've got here you've got your portfolio, so you can see there since the end of March up by 2.9. Over the year to the end of March up 10.6. The comparator I've included, I think I maybe skipped over what that was. So ARC steady growth is a comparison with other similar organizations with the same sort of risk appetite and objectives. So it's a peer group comparison. So ARC stands for Asset Risk Consultants. And what happens is that we submit our performance numbers and other firms like us submit their performance numbers and they come up with an average performance for charities and other similar not-for-profit organizations based on how much risk that is taken in the management of the investments. So you can see there the 10.6% you had over the previous year. That's a combination of income and capital. So roughly 2.6% of that 10.6 is income and the rest is capital growth. So you're doing a bit better than similar organizations with similar investment appetites and attitude to risk. The other question you asked was about cash. And would you get more interest if you left it in the bank? And depending upon what level of interest you were able to get on what terms, you might be able to get a bit better than 2.6%. But if you put it in the bank, you don't get any capital growth. You get back what you put in. And I suppose there is a long-term nature to the funds here, in that we need to provide some capital growth to protect against inflation in the long term. Because I suppose you want to be able to be able to provide a similar benefit to people 10, 15 years down the line. And so inflation protection is quite important on that basis. So yes, you would get more if you stuck it in the bank probably at the moment, but the cost of doing that would be that you wouldn't get any growth in capital over the longer term.
I'll come back in on that, Chair.
Yeah, go ahead.
Thank you. Thanks, Dave, for that. The capital growth is the interesting part for me. I think it's been alluded to before, but I don't think I've actually had as much detail or I've understood it as well as what I do now. So thank you for that description and for explaining that to us. In the papers, I see that it says that we're going to profit from dividends of £793.45p. That is, I thought on a note here, but it's on the second page of your report, the valuation report. What are those dividends from? And are they liable to the likes of just regular tax or dividends tax, or how do they work?
So I don't have a copy of the report, so I'm not able to comment specifically on what that would be for. But looking forward, we expect the investments to generate an annual amount of income of just over £18,000 a year.
So that's £18,000 above the capital?
Yes. So if the capital stays still, even if that doesn't grow, obviously we hope it does, but if the capital stays still, we should pay out income of just over £18,000 a year.
That's right. And with our ESG level of 6, you said, and it goes up to, did you say 9 or 10?
So the risk level that you sit in is risk level 6.
Risk level 6. So the ESG is different to the likes of your risk levels if you were to put it into a pension, isn't it? The risk levels
Yes.
are more on the environmental, social and governance situation, which is more a case of if we were to up our risk level, we're probably be more likely to go into like mining and stuff like that, things that maybe not so environmentally friendly. Are those markets more lucrative for our return?
So when we're looking at the overall risk level of the portfolio, you currently sit in risk category 6, which is broadly in the middle. If you were to go up a level to risk category 7, that would mean less investment in diversifying assets. So you'd have less in fixed interest, less in gold, and you'd have more in equity markets. And if you went up to risk category 8, you would only have exposure to equity markets with no diversification. So the risk is more in that context at an asset allocation level and how much you have in stock markets, which can be volatile in the short term, and diversifying assets. The ESG risk is distinct from that. That is looking at things from a sort of non-financial standpoint. How good are the companies from a non-financial standpoint on environmental, social, and governance factors?
Yeah, just go ahead, Andrew.
Not a problem. Thanks for that, David. So I know that you're probably not going to be able to give a suggestion to us at all because you're going to be impartial here. But if on our, and this might be a completely off the wall question, well, not off the wall, it's relevant, but it's maybe not, you won't have the detail for it. If, let's say, we were in risk factor 7, would you say that in the current market we would see a higher investment?
So over longer time frames, you should generally be rewarded for taking more risk. And if you look over the long term, risk category 7 would have done better than risk category 6. But there is a cost in that risk category 7 is more volatile. So more equity market investment, more volatile investment. So it's a trade-off between the returns and the volatility that you're likely to expect.
So when you'll know much more than what I will, in the sense of the capital amount that we're sitting with the £691,000, the £332 right now. Is that your standard kind of capital? Would you say that if we were to go to risk factor 7 or even 8, that we're going to be reasonably safe that in a long term we could pull that back and probably benefit our fund more if we were to go up a risk factor?
Yeah, I mean, that's an interesting question. When considering the level of risk that you're in, we have a discussion, and one of the things we talk about is your capacity for short-term losses. So as an organization, how able are you to tolerate short-term volatility in the value of the capital in the interests of getting better returns over the longer term? So the sorts of factors that would influence that, how long is your investment time horizon? In your case, our understanding is that it's very long term. We're not aware of any plans to take any capital out of the portfolio, so you can leave that money that's there indefinitely, potentially. Your capacity for your income, your capacity for loss in terms of the income. So say stock markets crash for whatever reason and the income fell substantially, what impact would that have on you as an organization? If, say, the income were to fall by 20%, how would that impact you? Well, you've got a lot of discretion, I think, over the sorts of areas that you support. So you could cut your cloth accordingly. It's not like you're an organization where you need to get a certain level of income from the portfolio to carry out your day-to-day operations. So I think maybe risk category 8, we have very few clients in risk category 8. I don't think it's unreasonable that you should consider risk category 7. Our understanding certainly is that you don't need any income, any capital. You've got a lot of discretion over what you spend the money on, and I think you could reasonably consider moving up to risk category 7.
Thanks for that, David, because that's kind of how I was looking at it. Now, I would have a bit more expert advice in the sense of if you've got 691,000 there, you can afford to short-term lose a bit of that for a long-term gain. So if we're playing with that number, if it was in my bank account, I would be sticking where I am on a safe bet. But then I'm only here for probably another 50 years or so as a human being, whereas this fund is supposed to be here for eternity, hopefully benefiting the people of Stranraer. So, Chair, this is maybe where I would maybe suggest that we'll look and discuss that. Going up a risk category or 2.
I should also probably just check in. You probably would find that your income would fall slightly if you went up a risk category as well, because at the moment, lower risk assets are giving you more income than higher risk assets. So again, that's another trade-off that you might have to accept.
Okay.
Sorry there. So there's no point in going up a risk category if we're going to not make much income.
You would hope that your overall return would be better, but more of that would come in the form of capital growth and less of it would come in the form of income.
Thanks for that, Chair.
Okay. Thanks, Councillor Giusti. You're very inquisitive and you've asked a lot of questions, which is good. Are there any more questions for David? Nope. Okay, so I'll move on to the recommendations. We've agreed to receive the presentation. We've done that. Thank you, David. And we now need to make a decision on the investment. Do we have any proposals? Councillor Giusti.
Thanks, Chair. So, Chair, one of the things I've discussed this with members previously, in the sense that we've got capital here, and we could maybe put a bit of it to good use and actually support Stranraer. Maybe that isn't for this moment in time, but I just think I should put it out there in a recorded meeting. Where could we buy a couple of shops? I don't know, David, that this is maybe out of your kind of knowledge here, but if we can buy a couple of shops in Stranraer, for example, for 30,000, 40,000, which is not completely out there, and rent them out for £5,000 a year, or maybe 4, depending on what we want to see out of it, in the sense of keeping a shop open in the town, using a building that's not used right now. Will we have a better social justice, for example, in Stranraer, seeing those shops used, and that would be a good use of our funds. That's more of a long-term view for the committee, I think, and maybe not for this current discussion. But maybe actually, David, would you have a view on that? Do you see any of your clients taking money out to do any projects like that, purchasing properties in their local towns, etc.?
Occasionally, we do see clients taking out money to diversify. It tends to be more residential property that they invest in. The thing with particularly high street retail is that it probably isn't a particularly attractive long-term investment. The high street has unfortunately come under enormous pressure over the last sort of 10 or 15 years, and there's little sign of that getting better. So, you know, if you did buy a shop for a certain amount, and you had to sell it, you know, would the valuation go up or down over the period that you held it? You may decide as a group as a group that the social benefit is worth the financial cost, and that's not for me to tell you that would be justified on that basis. But I suppose you have to weigh up the social benefit and the cost today against the future benefits that those funds could generate if they stayed invested in the portfolio.
Yeah, I'll just bring in a minute, Andrew. I'm conscious that the decision that we make today isn't about, you know, I mean, you raised some very noble points about, you know, what we can spend the money on, but that's fundamentally not the thrust of what today's decision about. Today's decision is about our investment portfolio and what we want to do with that, not what we're going to spend the money on. If that, fingers crossed. And Andrew, you wanted back in. Sorry.
Chair, Chris, the Councillor Hill wants to come in, but I was going to make a proposal.
Okay, I'll let Councillor Hill in now. Thanks.
Yeah, can I just ask, is the amount of 691,000 taken into account the loan that we agreed at last council meeting? Has that come off that? And if we have other groups, if it's set a precedent and we have other groups coming to us for loan amounts, how does that affect our long-term investment if we're taking it out on a drip feed because we did talk at the previous committee about taking some more out because the fund was so low and there was quite a lot of poverty within the Stranraer at the moment, and community groups were struggling to get grant funding. And you know, we were wanting to help the constituents of Stranraer a wee bit more. So looking at all of those figures, have those figures been incorporated into this investment? Where are we with that, please, before we go and Andrew moves for anything or we make any decisions? If we could have a bit of advice on that, David, that would be great. Thanks.
Yep. So the 709,000 only covers assets that we hold. So we're only allowed to report on assets that we have custody for. So that wouldn't include anything else that you've got, loans or anything like that.
Councillor Hill?
Yeah, sorry. Can you just say the amount again? Sorry, I'm getting a bit confused. I've got papers all over my desk from previous committees.
So the value of the assets that we hold as at the 22nd of August, £709,460.
Okay. Right, okay.
So as I said, when we report to you, we're only allowed to talk about the assets that we hold. We're not able to discuss anything which is out with our custody.
So it's £709,460 that you hold.
That's right.
Yeah, I mean, to my knowledge, and I'm sure maybe Gillian can come in on this one, there is local assets within the common good, which are separate from the investment portfolio. Is that right, Gillian?
Thanks, Stuart. I'm happy to clarify, Councillor Hill, with finance, just in relation to where the loan money that you're talking about, what aspect of your common good fund that's going to come from. I'm happy to follow that up and feedback to members.
Right, okay. I was just a bit confused because at 3.2 it says that as of March it was 691,33,000. Yeah, it says a different figure. So I'm assuming that this is interest gained for the 709 to August from March. Am I correct?
Yeah, so the valuation will change every day.
Okay.
And since the end of March, I think it's gone up a bit. Yeah.
So David, just off the back of that, is that the capital gain? Because we spent
that would be capital gain, yeah, because we pay the income out.
Right.
Okay, yeah. Andrew, were you going to propose a way forward here?
Go on, say to your risk factor 9. No, I was going to say to you, perhaps we should go up a risk factor, but I'm going to quickly ask David just before we go for that. David, how fluid are we with this? Because I realise that we don't have Councillor Scobie with us, and Councillor Scobie's got a lot of history and knowledge on this. I don't know if this has been tried before. Going up a risk level or not, or whatever, this, that, and the next. And I don't want to bind the four of us to a higher risk factor if there's no way out of it, if we want to come out in maybe a year's time or 6 months' time.
Yeah, if I could just jump in there quickly. I wouldn't be comfortable doing that without going through governance within the council and internally first, with an option like that, so we can get from the council's position how this would affect things like well, how we operate as a council, basically, and all considerations. Chrissy?
Is it not delegated to us as elected members to make that decision, not governance?
No, I'm not asking for governance to make the decision, Chrissy. I'm asking for advice before we make that decision. That would be my preference. I wouldn't be comfortable making a, bull in a china shop decision like that. I mean, there are considerations which Councillor Drucey has raised about, the shortcomings within the fund and how it would be great if we did have more money and such for investments. But I'll let David jump in just now if you've got a comment, David.
So nothing's tied in. There's no sort of lock-in period or anything like that. So if you did move to risk category 7, there'd be nothing to stop you changing your mind again in the future. I mean, I would think we would prefer it if you weren't sort of chopping and changing between risk categories all the time. But if you did decide to do it and you changed your mind for whatever reason in a year, 18 months, then there's nothing to stop you changing it back again.
Okay. Gillian, would we be able to, if we did want to do this decision, would we be able to request beforehand a governance assessment of that option within the council? That would be my preference.
If, as chair, if you want to pause the meeting, I can try and get governance on the phone to have a conversation with members, or if it's a longer term piece of work. I'm not sure, David, when do you need a decision by from the Stranraer Common Good Subcommittee?
So, I mean, even if you decided to defer the decision, I mean, I could prepare the client advice review on the basis of things are today, and then we could revisit that once you've got more comfortable with what decision-making process is relevant.
Yeah, this isn't me poo-pooing the idea, but it is me wanting additional clarity and a recommendation from the council internally before a decision is made. And that's not saying that I'm going to agree with the recommendation. I would just like to have that information. Councillor Giusti.
Yeah, I'm not trying to make anyone uncomfortable here, but what we're looking for governance, because this is a self-governing committee. It's actually separate to the council. It's just that it comes under the council umbrella to help us out with it. I don't know what you're looking for in advice. We've got the expert here that's given us advice today. I honestly don't know what advice we could get from governance. I'm not trying to poo-poo that idea. I would understand if we're wanting to wait on Councillor Scobie to be a part of this, so that we're going forward as 4 members. I could accept that, but I don't know if the council's inner governance has really got much to give us. Sorry.
Sorry, could I suggest something?
Yep, David.
So we have a number of clients who've had a similar discussion over the course of the last few years. And one thing that we'd be very happy to provide, which has been useful for other clients, is a sort of discussion paper, which would just lay out where we are just now, what factors should you consider as part of the decision-making process, and what it would actually mean in terms of assets moving from one asset class to another. So you've got all the information in front of you. You've got the sort of black and white. You can share it with any other councillors who are not here today, and that way you've just got all the relevant information for making the decision. And
I think that could be quite useful, David. It's just so that we can take into account all the variables which are at play here, whether that's internally in the council or externally for yourselves as the body in question. Are we happy? I mean, do you have that available to hand, David?
I don't have it to hand, but we can get it across to you in the course of the next sort of week or so.
Okay. So if we don't need to make a decision today, would we? Oh, Councillor Giusti, is that your hand up? Yeah.
I was going to suggest, Chair, do we adjourn this item? Obviously, we don't need David to come back into our next meeting, but if we get that information circulated amongst the members, maybe even perhaps have a briefing with the 4 members and Gillian. I don't know if it would be useful for David to be there to maybe fill in Councillor Scobie. But whatever we do, I'd like us to go forward that we're all comfortable, because this is a big stack of cash here that could either make more money for us or we can obliterate it. And I want us all to be comfortable with that. So, and one of the things that David said is that we've got a chance of building the capital. I think for long-term gain, we need to seriously look at this on how can we build this capital so that it's going to serve my grandkids, your grandkids, whoever, in 100 years' time. And that's my thinking, Chair. But caution is wise, and I would say we defer a decision.
Yeah, I mean, it is called risk for a reason. So I'd like to have all the information to hand before a decision was made. And as you said, to make sure that Councillor Scobie's in the room, so it's a joint decision between all 4 ward members. David, can you advise about as soon as you could get that information over to us?
Yeah, we should. I'll be able to send that across probably next week.
Okay.
So I can send that to Stephen
Mhm.
White, who's our sort of main contact, and I'm sure he can pass it on to you. Very happy to come along to any subsequent meetings if you
Okay.
feel that would be helpful.
Our next meeting for the Common Good is scheduled on the 6th of November this year. Is that okay within your timescales, David?
Let me check my diary.
Councillor Hill, your hands up.
Yeah, I'm just cautious that we're saying the 6th of November, but we were talking about a briefing. Are we having a meeting beforehand? Are we having a briefing? What are we doing? And the other thing is, if we are to put in another meeting or another briefing, if I know it's extra work for you, Gillian, but if you could get in touch with Modern Gov and ask them not to overrun meetings, because it's, you know, like we spoke yesterday about this, meetings are overrunning other meetings, and if we all need to be here, it's really, really important that they're not overrunning, which I'm very cautious of at the moment. Thanks.
Gillian?
I'm happy to take that comment back. Just so members are aware, we are working on pulling together a members briefing. I think there was a request from the previous Common Good for a members briefing to be held. So if members are happy, we can add this into the next briefing session that we're going to be holding.
Is that the members briefing which was requested on the assets of the Stranraer Common Good, Gillian? Or is this something different? I know that at the last meeting we wanted a breakdown, and I believe Councillor Hill requested that it wasn't a briefing, that it was part of the committee, so it was in public.
No, it's yep, sorry.
Sorry, that was to do with the structure for the grant process.
Right. Okay.
The members briefing that we're going to be holding is going to be in relation to the Stranraer Common Good grant criteria.
Okay.
So if members are happy to include the finance, we can pull the papers together and get that issued out.
Yeah, no, that'd be really useful, Gillian. Thank you. Councillor Giusti.
Thanks, Chair. It's just a question for David in this sheet, in this documentation that we're going to be getting. In that, will there be any kind of, I don't want to add work to you, David, but is it possible to see if we go back 10 years on our investments as a common good, if we were for the last 10 years to be in risk factor 7, because I'm thinking of Star Trek, but would it be possible to say or extrapolate and say, well, if you didn't have this in gold, cash, and this, that, the next, and it was probably in the market, going on an average on the market, this is what we think we would have made. Is that possible, or is that a bit of a tall task to ask for?
We can show you how risk category 6 has performed relative to risk category 7. We'd include that, yeah.
That would be great. Just so that we've got something to compare with on what we've got and what we could have had. Not that I want hindsight, but just so I can learn from it.
What we would also include, and I think this is perhaps one of the sort of key points, is what the biggest drawdowns have been. So yes, you get better performance over the long term, but what's the biggest peak to trough falls that you would have experienced in the different risk categories? Because it's fine when things are going up, but you know, how would you feel if your assets fell by 20-25%? And the more risk you take, the bigger the drawdowns are. So we would also include those figures as well.
Okay, thank you. Councillor Hill?
Yeah, I think that's a valid point made by Councillor Giusti. I think it would be good. And if there was anything that was similar that you could show us, sort of like pattern-wise, to put it against in a risk category higher, that would be great as well. And Gillian, can we have on that seminar or the next meeting the assets so that we have a whole view of what Stranraer Common Good actually hold, what we have, and so because it would be really good to know all in one sort of like stage rather than having different meetings about different things. Thanks.
I'll bring in Gillian and then Councillor Giusti. Yep.
Thank you, Chair. Just in response to Councillor Hill's question, I am liaising with Property and Estates and Legal Services in relation to the assets that are part of Stranraer Common Good, and as soon as I've got anything, it'll be out to members. So I am working on that at the moment.
Good stuff. Andrew, you're on mute.
Thanks, Chair. I'm not trying to make this the Andrew Juicy show, but it's not on this item actually. It's more on what we're coming in the future with the current assets. Within that, Gillian, can we make sure that we've got what we're renting out, the likes of the castle, etc. What rental income, but on top of that, when that was last agreed, because if that was last agreed and it's out with its term, I think the Common Good should be looking at maybe pumping some rents up to maybe the Rees and Galloway Council for the museum. I mean, we are here to be beneficiaries of the Common Good, not the Rees and Galloway Council right now. And yeah, just so that we know that. Thank you.
Gillian.
Yep, happy to take that on board, and I will pop that request over to Property Services when they're pulling their information together for you.
Thank you. Okay, members, I'm conscious I've just got a little pop-up saying 5 minutes left in the meeting. So coming to a decision, 2.2, we're not making a decision today, but we're agreeing to defer the decision until the future briefing, and if governance could liaise with David and such in terms of that and getting that organised with the fullest of information. Is that okay with governance?
I can pop that request over, Chair,
Okay.
just to make sure that governance have sort of sight of the conversations that are going to be taking place, and if a representative needs to attend the briefing session, then yeah, we can do that.
Okay, thank you. I think that's us. That's our decision. Are both members happy with that? Yeah. Okay. Thank you. So that concludes that item. Any other business? I have no other urgent items of business. Oh, Councillor Giusti, do you have an urgent item of business?
I don't have an urgent item of business, Chair, but could we add to a future meeting a discussion about what we could do with our funds in town? And maybe, I don't want to add more work onto Gillian here, but David referred to some other Common Goods creating social housing, I believe, and how they've done that. If we can do something exciting with that fund and improve Stranraer and improve lives for people in Stranraer, we should maybe look at that, and I would like that to be a discussion. I don't know if that would be in a briefing or if it would be in a meeting or how you're going to carry that forward. I'll leave that to yourself and Gillian to decide.
Okay, thanks, Andrew. Gillian, have you got anything to say on that point? No.
Happy to take the lead from members if you want a briefing in relation to future plans, or if you want it to feature on the agenda. Yeah, happy to do what members are wanting to go ahead with.
Thank you. Okay, thank you everyone. That concludes today's meeting, and we'll see you at the next meeting. Thank you very much.
Can we just finish that point? Sorry, Chair.
Sorry.
That Gillian said there.
Yeah.
Can we just finish that point with Gillian? She said she was happy to take either a briefing or an actual meeting. Just to tie you that up, what would you prefer, Chair? I would like to see a case study if that's possible, but I know that that's maybe more difficult and putting a lot of time and pressure on you. But it'd be nice to see what other Common Goods are doing.
If we could get maybe benchmarking data, that would be useful. Yeah.
If maybe David can tell us what Common Goods have done it, and then maybe Gillian could write out to those Common Goods and ask them if they could send us some information if they're willing to. I don't know if I'm adding too much pressure onto officers here, but hey ho, need to try.
Yeah. I think Gillian's got your points, Andrew. So we'll collect that information. But thanks for raising. Okay. That concludes today's business. Thanks for all attending, and see you at the next meeting. Thank you.
Thank you.
Thanks,
Thank you.
Chair.